Gold and silver have been strong, are strong. That's because somebody is worried about something, whether it's currency debasement or war, bankruptcy, who knows what they're worried about, but somebody's worried about something. I own both because I know. I'm an old peasant, and all of us old peasants know you better have some gold and silver in the closet if something goes wrong. And that's why I hope I'm smart enough to never sell my gold or silver. Well, my kids have it someday, and I hope they don't sell it either. But the world does face, Danny, war, depression, inflation, there are all sorts of things going on out there that could be very, very disruptive. I don't want to have depression. I don't want to have bankruptcy. I don't want any of that stuff. So let's hope the world's going to be okay, but I'm cautious.
In recent years, gold investing has gained significant popularity, driven by the current economic climate marked by persistent inflation. As inflation erodes the value of the US dollar, investors are increasingly turning to inflation-hedging assets such as commodities. While gold has long held the status of a premier safe haven asset, silver is emerging as a noteworthy alternative investment, offering unique potential benefits. Often referred to as the poor man's gold, silver is now capturing the attention of investors as a strategic investment tool. Renowned American investor and financial commentator JimRogers is a vocal advocate for holding gold and silver in economic uncertainty. Rogers emphasizes that rising concerns over debt, currency debasement, and potential financial instability make precious metals essential components of a well-diversified portfolio. Silver, in particular, has recently made headlines after breaching the $33 mark, sparking fresh buying interest from momentum-focused traders. The metal surged to nearly $34.50 during Tuesday's North American session, reaching its highest level in over 12 years. This rally was fueled by escalating geopolitical tensions in the Middle East, as Israel launched missiles targeting Hezbollah's financial institutions in southern Lebanon. These developments have enhanced silver's appeal as a safe haven asset, much like gold, during periods of market turbulence. Rogers has long highlighted silver's potential, especially given its significant decline relative to gold's all-time highs. He points out that silver often plays catch-up to gold during market instability, making it an attractive investment with room for further gains. As geopolitical risks and economic uncertainty persist, silver's dual role as both an industrial metal and a store of value continues to reinforce its position in the eyes of cautious and strategic investors alike. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I own gold, as you well know. I've never sold any of my gold, which I've had for decades. And if it goes down, I hope I'm smart enough to buy more. If I were buying something today, I would buy silver. I own lots of silver as well. And silver is down 40% or so from its all-time high, while gold is making all-time highs. So if I were buying something today, I would prefer silver. But the real answer to your question is, I'm not the only person who knows that there are problems on the horizon. The U.S. debt is staggering. If you just look at the numbers, and I'm afraid nobody in Washington looks at the numbers, but they're incomprehensible. They can never be paid. I have young daughters. They're going to have huge problems with the U.S. economy and currency in their lifetimes. It's a good time to be an old American. It's not a good time to be a young American, because young people are going to have lots of problems. I remember, in 1924, Britain was the richest, most powerful country in the world. 50 years later, it's not a typo, 50 years later, Britain was bankrupt, totally bankrupt. The IMF had to help them pay their bills. So this has happened before. I'm not suggesting when the U.S. is going to have those problems, but I know they're coming. I've read enough of history to know that they're coming. It's not good. But that doesn't mean, Danny, that right now not everybody's having a good time. Nobody sees any problems on the horizon. There's no war, there's no famine, there's nothing coming down the road. So I'm starting to worry. Gold and silver have been strong, are strong. And that's because somebody is worried about something, whether it's currency debasement or war, bankruptcy, who knows what they're worried about, but somebody's worried about something. I own both because I know, I'm an old peasant, and all of us old peasants know you better have some gold and silver in the closet if something goes wrong. And that's why I hope I'm smart enough to never sell my gold or silver. Well, my kids have it someday, and I hope they don't sell it either. But the world does face, I mean, Danny, war, depression, there are also inflation, there are all sorts of things going on out there that could be very, very disruptive. But at the moment, nobody cares. Everybody says they're not so serious. I hope they're not serious. I don't want to have a war. I don't want to have depression. I don't want to have bankruptcy. I don't want any of that stuff. So let's hope the world's going to be okay. But I'm cautious. I'm not as smart as the rest of the world, but I own both of those things you talked about. I also own silver. If either of them go down, I hope I'm smart enough to buy more. When the next serious problem comes, and it looks more and more likely in the near future, when I say the near future, the next year or two, when that happens, everybody historically has fled to gold, silver, dollars. If the dollar goes very high this time, I hope I'm smart enough to sell it because I don't see any solution to the problems of the US dollar longer term. And when I say longer term, I'm talking about 2 or 3 years.
JimRogers has long warned about the growing debt burden in the United States, drawing attention to the country's shift from being a creditor nation in the mid-20th century to its current status as a debtor nation. This shift, which began in the 1980s, paints a bleak but realistic picture of where the U.S. economy might be headed. Rogers' concerns are increasingly echoed by financial analysts, especially as the U.S. debt increases. The financial strain became even more evident in the fiscal year that just ended, with the U.S. government's interest cost burden climbing to its highest level since the 1990s. The Treasury reported spending $882 billion on net interest payments through September, an average of about $2.4 billion daily. This expenditure accounted for 3.06% of the country's gross domestic product, the highest ratio since 1996. The mounting interest payments underscore the growing fiscal challenges faced by the U.S. government, with debt service costs now a significant factor in shaping future policy options. Despite this, deficit reduction has not taken center stage in the political discourse, with neither former President Donald Trump nor Vice President Kamala Harris prioritizing it in their campaigns. Nevertheless, the looming debt issue remains a critical concern for the next administration. With Congress likely heading for a narrow partisan split, even a few deficit-conscious legislators could disrupt broader tax and spending plans, making it challenging to implement significant fiscal reforms. Rogers' warning that debt issues are bound to catch up with the U.S. economy is becoming increasingly relevant. The potential for economic instability rises as the debt service burden grows and policy options narrow. This escalating fiscal challenge will weigh heavily on the nation's financial health and global standing, reinforcing the importance of holding tangible assets, like gold and silver, to hedge against potential economic crises. Let's get back to the interview.
Most of these things do happen slowly and then all at once, and everybody says, oh my gosh, how can you possibly own pounds, British pounds, in the last crisis? But many people did, but then it became impossible to own British pounds. I mean, I can remember friends who want to go to Europe even, they couldn't take more than 50 pounds to go on an international trip because things were so serious. That has always happened during currency crises as countries have lost their currency status. And I repeat, I look at the numbers and I am stunned at the U.S. situation. And I don't like it. I'm an American citizen. My kids are American citizens. But unfortunately, nobody, I mean, you and I are talking about it. That's because I keep on changing the subject, but most people in America could care less. And Washington says, oh, don't worry. We'll be okay. We're America. Well, you say it's a slow burn. It is a slow burn, but it's been going on, I guess, technically since about the 1980s. America became a debtor nation for the first time. So for 30 or 40 years, America has been a debtor nation, and it's getting worse every day because we keep spending money we don't have. So yes, it has been a slow burn, 30 or 40 years. But, Danny, these things come to an end. They always have. And then, as you point out, suddenly everybody says, oh my gosh, do you know that America's in debt? You know, America has huge debt. They'll all be shouting at each other. How did this happen? Who did it? You did it. Daddy did it. Somebody did it, you know. these people in Washington did it. No, the people in Washington said, no, it's not us. It's not us. It's the foreigners. It's all because of the foreigners. Throughout history, when a country has problems, the first thing the government does is blame the foreigners, no matter what it is, no matter where it is. Nobody wants to say, oh, yes, we made a mistake. We fouled things up. We have horrible problems. No. They say the foreigners. It's those horrible, evil foreigners. That's the problem. And then they make even more stupid laws. They put on exchange controls. They do everything to make it worse. No, you should be worried.
Why is it that it... Go ahead.
You don't have to be worried today, but you should be cautious and thinking about it.
With global economic uncertainty and rising inflation, gold continues to solidify its role as a strategic asset. China's significant shift from U.S. treasuries to gold, alongside other BRICS nations, signals a broader move to hedge against instability. As central banks consider future interest rate cuts, the long-term value of gold becomes increasingly apparent. How do you view gold's position in the current economic environment? Do you see it as a safeguard for the future? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.